I'm Steve McIntyre-Smith and welcome to Buying an Accounting Firm. Today we're going to look at 17 major aspects you'll need to know about in order to be well prepared for making one of the biggest purchases of your life, probably second only to your home. When I was in public accounting in the 1980s and early to mid-1990s, I searched high and low for reference materials and training tools to help me. But at that time, alas, none were available. I was involved in buying and building a number of practices, which resulted in me selling a sizable firm when I decided to move out of public accounting. But despite an absence of any outside help or counsel, I managed to get through it without doing any serious damage to myself or my clients. Even today, if you search for reference materials, there's still virtually nothing on the market that helps practitioners to approach buying a firm. So, I was delighted when the Canadian Institute of Chartered Accountants approached me a few years ago to write a series of checklists for them to provide to practitioners who were considering their own succession issues. The result was the CICA Succession Planning Toolkit, and that's available through the Institute's bookstore and at their online marketplace at knotia.ca. That's knotia.ca. After the launch of the book and the start of my own firm's video production facility, the next logical step for me was to develop a series of DVDs for practitioners, and obviously you're now watching the results. So in this presentation we're going to talk about buying an accounting firm. So let's have a look at the topic headings that we're going to cover today. This DVD is broken down into 17 main chapters, each one covering a specific topic. So here's what we're going to talk about. First of all, we'll look at why buy. Then we'll look at the unexpected tasks you'll need to do right now. Then we'll talk about how to go about finding a seller, and then what to look for. Then there's some key issues to discuss, and then the most important aspects to get right in terms of doing a deal. Then we'll look at some of the vital documentation you'll need to get prepared, and we'll talk about how to present yourself to prospective sellers. Then we'll look at what and when to tell your staff, and then what and when to tell your clients. Then we'll look at pitching the deal as a merger for maximum client retention, some of the options for minimizing the price, the devil is in the details, and then we'll look at the methods for calculating the earnout, assuming that you're going to make the purchase subject to retention, and then thus there'll be an earnout clause. We'll look at sources of finance. We'll look at what most sellers are looking for in a buyer. We'll look at what you'll need from the seller and where to get help. So, as you can see, there's a lot of material to cover, so let's get started. So, who in their right mind would want to buy an accounting firm? Well, actually, even in a downturn, buying a practice or a book of business does make a lot of sense. Buying an established practice means that you don't have to take the risk of hanging a shingle and waiting for the phone to ring with some new business. You don't have to go out and learn new marketing skills or spend a lot of money on marketing initiatives that, if not done right, might not produce the results you're looking for. You get an immediate jump start and the financial security of knowing that there's an established base behind you to give you the confidence.